Hey guys, Whitney here. Welcome to the Passive Investing Made Simple Bootcamp. I'm your host, Whitney Elkins-Hutten. And this is a bootcamp that I do on about a monthly basis. And, really what we're doing is we're taking a skill that you need to have as a passive investor, breaking it down and putting it into action, showing real world examples. So this is a action-filled bootcamp. So I want to make sure that you guys know where your Q&A box is. If you go to the bottom of your Zoom screen, you should see Q&A. Don't go to chat. I won't be looking there, but if you have a question as I go over the material today, make sure you go down to the Q&A box, open it up, type in your question. I'm going to answer as many questions as I can in line with today's presentation. We're going to go for about an hour today, and then I'll hang out for a few minutes after and field anything else that's just kind of unrelated to today's presentation. So what are we covering today? Today we are covering what is a PPM in passive real estate. So we're going to define what it is, why it's important that you as a passive investor are actually got eyes on the PPM, know how to navigate it. And then we're going to actually take a look at a PPM for a deal. It doesn't matter what deal it is, but one of our PPMs. And I'm going to show you different sections. Now, just because you see our PPM doesn't mean it's going to be like any other operator's PPM, but at least you're going to have some familiarity with where to find certain items in the PPM. Okay, guys. So if you don't know me, well, first of all, let's just tackle why we're doing this today. Maybe you've tried to invest passively before, but just couldn't quite get comfortable with making the investment. Maybe you've gotten in a deal before and realized, oops, I made a mistake. Don't worry, guys. If you have done that, so many people have been in the same shoes. I want to help you not make those mistakes moving forward. Or maybe you're just so overwhelmed about getting into your first deal or your next deal that you're just like, I don't even know where to start. So I'm not going to do anything. Okay. You've got analysis paralysis. This is what the bootcamp is to help you work through. Okay. So this is the whole reason why I invest in real estate is me and my crazy crew here. For those of you who have never met me before, my name's Whitney. I'm the director of investor education here. I started off real estate investing in 2002, completely by accident. Did a live-in flip at that point in time. Didn't know that that's what I was going to be doing. Got bitten by the real estate bug, did several more flips of my own, and then eventually met my husband and we did a few more together. We got really good at building up buckets of equity, but what we weren't good at is creating cash flow from those buckets of equity that we were building on. And so when we finally were able to understand what we actually want in life is financial freedom, and then that requires cash flow, then that's when the light bulb went off and we started buy and hold real estate, eventually scaled up into larger multifamily deals actively, and then realized, how can we start taking some chips off the table, for that day when we may not want to be nearly as active anymore, which we discovered passive real estate. And, so we just used our active investments, our active income, like from our day jobs, took everything we possibly could, saved it up, ran it through and invested in passive investments. That way, our passive income could start building up. That way, we become essentially work optional. We have financial freedom, choice freedom, freedom of time, freedom of location, and freedom to create impact in the world. And if that's what you're here to do, we can actually help you do that here at passiveinvesting.com. We have some strong returns for our investors. We have 1.4 billion in assets under management and have made over 51 million in investor distribution. All right, so let's get into that brass tacks today. We should have everybody in the room. So I know some people are coming a little bit late. Anyways, let's get started. So we're going to talk about what is a PPM. So first, a PPM is an acronym. It means Private Placement Memorandum. Okay, this is the legal documents that secure your placement in a deal. But it's not just, the PPM is actually one of the documents in a collection of documents. So we call it the PPM for short. It's easier to say than, hey, let's get you into your subscription agreement, operating agreement, and then PPM. Okay, we just call it the PPM. But just know every PPM that you sign with any operator should have 3 components. If it doesn't have these 3 components, run. I'm serious, run. Okay, it must have a subscription agreement. Okay, it must have an operating agreement that tells you about the business. And then the private placement memorandum. All right, so let's break this down a little bit further. The PPM, why is it important that you understand what it is and actually read it? Is because it tells everything that you need to know about the company that you're investing with, the terms of the investment, the nature of the business of the company and what the investment you're going into, and the potential risk of the investments. Okay. Again, this document includes the subscription agreement, which constitutes a legal contract between the issuing company or the operator, or the issuing company that the operator is managing, and the investor, you as the limited partner. Okay. The combination of these 3 documents, the subscription agreement, operating agreement, and private placement memorandum, are the 3 documents that meet the requirements of the Securities Exchange Commission regulators and are similar to what you would find in a prospectus for a publicly traded stocks, bonds, mutual fund. Okay, publicly traded securities. So here's the thing: a lot of times I talk to investors, and they're like, the whole reason why I don't invest in passive real estate is because I don't want to read a PPM. It's too complicated. Guess what? Even if you're in stocks, bonds, and mutual fund, you get the exact same document. It's just that they type it up in 8-point font, super tiny, mail it out to you one time a year, and it's called a prospectus. Okay? So you're getting the exact same documentation. It's just that they've made it super, super tiny. If we did that with the PPM, yeah, we could get it in a nice little booklet and mail it out to you. But we want you to be able to understand it. All right. So let's start kind of working our way. Now that we know what a PPM is, we understand why it's important for you as an investor to read this, because it has everything that you need to know about the investment. Now, here's the thing about a PPM is that it's legalese. I get that. So if you were on my webinar yesterday, the masterclass webinar, where we talked about what team members you need to have as a passive investor, I highly, highly suggest, especially for your first few investments, and especially if you're investing in a new asset class or with a new operator, or within a new asset class with a new operator, that you have a lawyer review your documents, a securities lawyer who's familiar with real estate. Okay, not just any lawyer. Uncle Joe doesn't count unless they're a securities lawyer in real estate. Now, Uncle Joe, if he's not a securities lawyer, should tell you. I actually have an uncle. Okay, his name is Uncle Vaughn. He's a mineral rights lawyer, but he's not a securities lawyer, so he's not going to advise me on this. So they should, definitely tell you. All right, that $300-400 you might spend to have that PPM reviewed might seem like a hefty price tag, but just think about it. If you're investing $50,000, $100,000, $250,000, $1 million, that $400 and just for the, to have that lawyer just do a cursory review of the document, okay, to make sure it has all the things in there that it needs to have to be legally compliant, is part of your due diligence. All right. So, but before you hand that over to your lawyer to review, you can actually do a little bit of sleuthing yourself. Okay, we call this vetting. So you could read the documents and, obviously consult with your legal and tax team for any advice you need, but make sure that in that PPM, before you hand it over, okay, these are kind of like red flags. Make sure that it identifies who are the general partners, all of the general partners who are operating the deal. Okay, maybe you are investing through a co-GP. That co-GP should be named in the PPM, right? Make sure that happens. It should also name the location of the deal and the number of units. Say like if it's a multifamily deal, it's 252 units in Myrtle Beach, North Carolina. It should name those details in there. It should give the deal structure, okay? It should name like how preferred returns are being handled, how cash flow is being distributed, and also the waterfall, who gets what and when, right? All that should be outlined in there. It should go over projected returns. Now, what a lot of times operators do is that in the section for business plan, it will take, you should get the offering memorandum, okay? Or deck as it's called. And that just gets slid into the PPM, okay? And, to replace the business plan, okay? But just make sure it's the same one that you reviewed, okay? It hasn't been updated. It also should go through, make sure that all the fees related to the deal are outlined in there, okay? And that it names the distribution timeline and frequency. Okay, now you're looking at a 120-page document, probably. How are you going to find all these things? This is a great one. You want to get really familiar with the structure, okay? But two, Control F on your keyboard. You can go searching for a lot of these things too. Now, for me, I do this when I get a PPM. I search for these bullet points initially, and if the PPM is missing any of these bullet points, I don't forward it on to my lawyer. I don't spend the money. Okay, I go back to the operator and go, where can I find this? I want them walking me through the document. Okay, so, all right, so those are just, at minimum, those are the things that you want to suss out. Okay, that's again, kind of, putting the final touches on all this vetting that you've been doing for the operator, the market, and the deal, making sure all that information is outlined in the PPM. Now, I got a question that came in. Hold on 2 seconds. When you have time, define co-GP. So co-general partner. Okay, so the general partner can be, when you look at the general partnership, it's like slices of a pie, right? The general partnership has duties for acquiring the deal, underwriting the deal, performing due diligence on the deal, putting down payments for the deal, okay, earnest money, getting financing for the deal, bringing investor capital for the deal, completing asset management for the deal, okay, and ongoing and servicing for the investor. Those are just some broad strokes, 8 functions of the general partnership. There might be somebody that is going to be in charge of the 1031 exchange or refinancing on the capital. There's going to be, maybe one group takes on all the legal components for the deal and tax components for the deal. So that pie, all those responsibilities can get divvied up amongst the general partners. So the workload is distributed. And when you have that divvying going on, that's called co-GP. Now, usually there'll be one main general partner, and that's generally the person who has found the deal, underwriting the deal, bringing down payment and getting the loan. Who, somebody's carrying those 4 functions, they're generally going to be, and I'm sorry, day-to-day operations of the deal. That person's going to be the main general partner. Everybody else would be in a co-GP position. Okay, so it takes a village to take down these deals. A village to take down an $80 million, $120 million deal. Okay, even a $10 million deal could take a village, right? But anyways, that's what it means. All right, so we talked about what a PPM is, why it's important for you to understand, to read the PPM, what you can expect to find in there. We talked about at a high level, what are the things you're confirming in the PPM before you start reading the whole thing or giving it to your lawyer to read the whole thing. Okay, you want to make sure those things are in there, because if it's missing any one of those main key points, we want to make sure to go back and to the operator and ask them where it is. But now you're getting into filling out the deal. Okay, you started working through the PPM. Everything is above board. It's what you've expected. Okay, now you got to figure out how you're going to title your deal. Okay, how are you going to fund it? All right, now this is something we cannot advise you on. Only your legal and tax team can probably give you advice on this, but I'm going to walk you through different ways we see our investors fund deal. That way you can kind of understand, how do I need to then fill out the PPM, or who do I need to talk to? Okay, so if you're going to actually hold this in your personal name, fund it with cash out of your checking account, out of your savings account, you can fund it as an individual or if you're married or have a spouse or a spousal equivalent, you can do it jointly, okay? Or, you can do it jointly with another partner as well. Now, individually, you're just going to be investing as yourself, one signer, okay? Jointly, you're going to be investing with a spouse or a communal partner. Generally, that's what we want to see. You can invest as an entity through your trust, business, or retirement account, okay? Or you can, in the retirement account can actually own an LLC. That's why I kind of mentioned it in there. Or you can invest through a retirement plan. These are things like self-directed IRAs, QRPs. They're essentially going to say for the benefit of, the company. Let's just say, I use Advanta IRA for the benefit of, Whitney Elkins-Hutten. That would be like how I titled that if I were investing through my retirement account directly. QRP, it's going to be the same thing. But it's going to be Whitney Elkins-Hutten 401k and whatever the name of the 401k plan that I've adopted. All right. So let's get into this. Investing as an individual, what does that entail? Okay, so when you invest as an individual, and this is probably one of the roadblocks where when an investor invests in a deal, they're going to either have a roadblock understanding what they should be looking for in the PPM. And then once they understand that, okay, once they're comfortable with the deal and they're ready to sign, they might have a roadblock on, well, how do I hold title and fund it? Okay, so I'm going to go through what this looks like. Okay, again, this is not suggesting what you should do. That way you can understand moving forward, how do you want to fill out your PPMs? So investing as an individual, you're the only signer. It's going to be titled to your name. The tax ID is going to be your social security number. Okay. All the distributions are going to go to your personal account. All the tax benefits will flow to you personally in your name. Okay. Now, assets, we think about how are assets going to transfer? Should something happen to me? Are they going to go to my spouse, my kids? Like what do I designate beneficiaries here? In a PPM, when you complete it, you're not designating a beneficiary. So if you're investing as an individual, it's going to transfer according to your will, your trust, or if you don't have either one of those, it's going to transfer according to your state's laws. Now, if you're a 506C accredited investor, and you're going into a 506C deal that requires all investors to be accredited, you're going to need to have what we call an accredited investor letter. So you can go to a place like parallelmarkets.com to get a free letter. Okay. Online platform, we use them for a lot of our deals. You can also go to your own lawyer to get a letter, right? Or you can go to your CPA to get a letter. Okay. You can also go to an independent broker dealer to get a letter. That's what Parallel Markets is. It's a platform of broker dealers. They review your financial situation, maybe your income, and then they can issue a letter. Now, how do you know these three questions apply to no matter how you're going to title and fund your deal? You need to just consider before you complete the PPM, what kind of asset protection do you need? Okay. Do communal laws apply in your state? Because maybe you want to invest as an individual, but if you're in a communal state, like California, as an example, you have to fill it out jointly, okay? Also, how do you need assets to transfer, okay? Because, do you want it to transfer according to your will or trust, or do you want it to transfer according to your operating documents outlined in your entity agreement, your operating agreement for your own LLC, right? So those are just some questions to consider. Investing jointly, right? Here, there are going to be two signers. Okay. Some PPMs will allow you to title the asset in both names. Some of them will just say titled in one name and then the spouse fills out a separate form. Okay. The tax ID is going to be the social security number. Okay. Or numbers, depending on how the form is structured. Okay. All the distributions should go back to the joint or personal accounts. Okay, if you're investing jointly, to keep your record keeping above board, have all the distributions go back to your joint account. The tax benefits would flow to the primary investor, okay, but they can technically be used on the 1040 because if you're investing jointly, you're going to have to both claim the tax benefits. The asset is owned jointly. Okay, so therefore, again, it's still, something happens to both of you or one of you, it's going to flow to the other person on the document. If something happens to both of you, it's going to transfer based on your will, trust, or your state laws. And again, like before, if it's a 506c deal, you're going to have to present an accredited investor letter for both individuals, the joint individuals, if you're titling jointly. The same questions apply. What kind of asset, before you kind of enter here, what kind of asset protection do you need? Do you have a plan in case if your spouse or communal partners, do you have a plan to handle the asset in case of divorce, right? And make sure you've talked through that. Do you have a way to transfer the asset on your end, not our end, but as the operator's end, but on your end, if something should happen to both of you, okay? Do your documents, your will, your trust, or your state laws determine who it goes to, and that's what you want. All right, now we've got investing as an entity. Okay, generally, when you invest as an entity, there's only one signer, okay? And it's generally going to be either the manager or the trustee. So manager of the LLC, or if you're investing through a trust, it's going to be one of the trustees, okay? The titling is going to be to the trust or LLC name. Now, if you're investing, say, like through a revocable trust, you're going to put down, unless your revocable trust has a social security number, which I largely don't see, you're going to put down your social security number of whoever's signing the documents. Now, if it's an entity like an LLC, you're going to put down the EIN of the LLC, or if it's an irrevocable trust, that irrevocable trust will have an EIN as well. That's what you're going to put down for the tax ID. Now, now we're getting into some tricky territory, okay? Now, we don't check this, all right? This is you handling your affairs in your estate. So you want to make sure that you're compliant. Your distributions should go to whatever that entity account. So if you invested through a trust, guess what? The distributions should go back to your trust account. Okay. If you invested through an LLC, they need to go back to your LLC. We're not managing that. Okay. That is onus on you as the investor. Okay. Now, tax benefits, they're going to flow to the entity. Okay, they're going to flow to the LLC. They're going to flow to the trust, depending on how you invested in it. Now, this is where it gets a little murky, because sometimes at the end of the year, you're going to get a document from your operator that says, hey, is this a disregarded entity? Okay, what they're looking for is to understand if it is a disregarded entity, okay? And that is something you can partner with your accountant or your lawyer to help you fully understand how to complete that form. But what they're looking for is the underlying investor of the entity, okay? So if it is a disregarded entity, essentially all those losses aren't going to stay at the entity, they're going to flow up to your personal 1040. And so that operator needs to know who is the body, who's the person filing the 1040. Okay, that's what they're looking for. All right. Now, make sure for asset protection purposes that you have either in your trust documents, it fully outlined how the asset would move to your heirs, or in your operating agreement. That needs to be fully defined. Okay, that's something that your legal team can help you set up. Okay, you're not listing a beneficiary with the operator. Your legal team would have the underlying document, the underlying trust, the underlying operating agreement with the LLC, defining that for you. And again, if it's a 506c deal, then a accredited investor letter would be required for the entity itself or for all managers, beneficiaries, or members of that entity. So if you're investing through a trust, okay, and it's a spouse, a husband and wife, they have a revocable trust. That's how you want to invest through. That's totally fine, but both the husband and spouse would have to produce a letter, right? Because we need to know that the underlying people that are in the trust, that are beneficiaries, trustees of the trust, are accredited. If you're investing through an LLC, okay, all the underlying members in that LLC would need to have a letter to support that as well, okay? So it's not complicated. I think people just, it's sometimes foreign for people because, you know, it's not as easy as point and clicking in stocks, bonds, and mutual fund, but the benefits can be far outweigh just having that ease of clicking a button. All right, now IRA accounts. We've been spending a lot of time this spring on the Passive Investing Made Simple Masterclass talking to IRA companies to pick apart what self-directed IRAs are, what are defined, qualified retirement plans, what are the options out there, okay? I want to kind of help demystify this because this can be really confusing for people. Now, if you're investing, going to sign your documents, title them to your IRA, okay? Again, generally there's just one signer. The signer probably isn't you. It's probably going to be your custodian of your IRA. Now, this all depends. So what I suggest you do is if you're investing through retirement funds, you contact your custodian immediately. As soon as you identified a deal, you go to them and say, hey, I got a deal. Here's the PPM. How do you want me to fill this out? Okay. And oftentimes the custodian goes, we can't advise you on how to fill out the PPM. So that sounds confusing, right? Okay. So ask the specific question. I'm going to use funds in this account. How do I title the deal? And what is the tax ID I'm using? Okay. Now you're going to get a different answer. They're going to go, so you're going to title the deal, Advanta IRA for benefit of Whitney Elkins-Hutten. And here is your 9-digit EIN number, okay? C is just a more specific question, but now you're getting an answer, all right? Now, if you're going into a 506C deal, again, you're still going to need an accredited investor letter, and same rules apply. It's either the for benefit of account, that actual IRA account has to qualify for the letter, okay? Meaning it probably has $5 million in assets, or the underlying beneficiary of the account, you can provide an accredited investor letter and qualify individually on your own as an individual accredited investor. So you bypass that $5 million need, right? Okay, now I always suggest if you're ever going to invest through an IRA, get that IRA open sooner than later before you actually find a deal. Get it open and funded, because it still takes time to get all that paperwork in order and get funds wired over, especially if you're in a race to what we call a race to the wires, right? You got short timeline, say 2 weeks, to get everything filled out and funded. Now, your IRA your custodian might actually charge some fees to help you get invested. That's pretty standard in the environment. And they're going to have their own set of rules. And oddly enough, the rules will vary slightly custodian to custodian. So that's why I don't just have one set of rules to give to you guys, because each custodian is going to have a different way of operating, a different way of how they're going to review the PPM, sign it. And all they're reviewing it for is to make sure it is compliant with their custodian rules. They're not reviewing it for legalese to make sure terms are in your favor. They're not reviewing it for, to advise you on returns. They're not going to advise you if it's a good asset to go into. Okay, that's all done at the legal level, okay? So just know that with your self-directed IRA. All right, now, guys, I know I want to make sure I leave plenty of time at the end for Q&A. If you have any questions about this part, self-directed IRA, that is going to be an amazing time to get those questions answered. All right, now distributions have to go back to your IRA. You cannot pocket those distributions if you invested through a self-directed IRA account. All right, the tax benefits will flow to the self-directed IRA account and stay locked up there. So they're not going to flow to you personally, so you can use them on your 1040. The asset protection is going to be determined, asset protection and how things transfer are going to be determined by the beneficiary you've listed for your self-directed IRA account. All right, and depending what type of IRA account you've opened, you might be subject to UDFI tax, which triggers UBIT tax, okay? Now, again, that is something that you'll want to partner with your custodian on. I'm gonna bring on a couple people here in June to talk about UBIT. It's not as scary as everybody thinks, but it is real. We do need, if you're investing through your IRA account, you do need to be aware of that. Any masterclass I've done with a self-directed IRA provider, we always get the UBIT tax question. Go review those videos, and you're going to get a pretty standard answer on what happens there. Okay, now we are down to our tour of the PPM. Okay, so but for those of you who have to drop, who can't hang out with us for the next 25-ish minutes, here is, feel free to make sure that you're on my call schedule, see our open deals, go to passiveinvestingwithwhitney.com. Here's a little QR code to make it easier for you. I have an ebook there at this website too. It's a subpage on the passiveinvesting.com website. But now let's go tour a PPM, because I want to show you where these things are. Now, just keep in mind that the PPM I'm going to show you is specific for us and our deals. Okay, so if you're taking notes and you're like, for another operator and how they do their PPMs, that's going to be entirely different, potentially, but you're going to get the gist, right? That's the whole point. So let me open this up. Okay, so it's going to be a little bit small, but I just want to show you. Let's get some screen share going here. Okay. So again, this is a high-level tour. We're going to go fast and furious. This is not meant to tell you how to fill out an account. Okay, so the first page is going to be directions. All right. Now, these directions are going to be what you need to do to fill out the PPM. Okay, read it. Maybe have your lawyer review it. You're gonna be initialing that you have received the wire information, at least for us. Now, I've scrolled down, guys, because there's banking account information there. I'm not going to leave the banking account information popped up on the screen for you guys, but there's banking information there. So you're going to be initialing that that banking account information, and that you have it, that you're fully aware of where to wire funds, and you're going to be notifying us how you're filling this out, because that will actually trigger which boxes in the PPM you're going to be filling out. Now, not everybody codes their PPMs like that. We tried to make it as easy as possible. Now, I'm going to skip down. All of this is important, okay? But I'm going to skip to some pertinent places to really help guide you. I'm not saying skip pages reading them. No, you must. I highly suggest you read every page, especially for your first time. Okay. So this is our table of contents, right? So essentially, this is going to help you navigate the PPM. So if you're looking for some specific questions, this is going to kind of help you go through and figure out where those might be answered. All right. And if we skip down to page 13. So this is going to be a summary of the offering. So one of the first things you're going to see is the summary of the offering. It's going to tell you who the company is, again, who the manager is, who are the sponsors of the deal, what's being offered, the dollar amount, you know, all of that. Okay, so this is a high level summary of the deal. And then another like important section is the use of funds. So you want to make sure that you've looked at a deal in the offering memorandum, you've listened to the investor webinar. Now you want to make sure all those things that you read and heard are actually what's being outlined in the PPM, that this is exactly what we're purchasing. This is how much capital we're raising. This is what the capital is being used for, okay? Closing costs and stuff like that. So you want to just make sure you're fully aligned there, okay? And then you're going to hit a section that's called risk factors. Now, this is where a lot of investors are like, oh my gosh, this is so long. Securities and Exchange Commission, whether it's in a PPM or it's super teeny tiny 4-point font in that prospectus, requires all these things be listed out. So this isn't necessarily a long section. It's just that we don't put it in 4-point font and bury it in a prospectus and make you try to get a magnifying glass out to read it. So this is going to outline all the risk factors, known, unknown, that could possibly happen to this asset. We try to get those all outlined here. So these are great questions to ask, like, but it also, at the same time, you know, I know it can feel a little bit overwhelming too. I don't want to poo-poo the risk factors section because it's something that every investor needs to be aware of, but whether you're signing it here or signing it in your prospectus, in your stocks, bonds, and mutual fund, it's the same thing, okay? All right, now, another great section, okay, and again, risk factors are really long. It's going to be the objective and strategy for the plan, okay? What's happening? What are the capital members doing? What are the different classes doing, okay? In here, it's gonna outline, you know, the units, who's being going into what class of units, how is voting happen, is there any redemption provisions? So then it's going to tell you the distribution from operations, what's happening with the cash flow, okay? And this is called the waterfall, all right? So now we're getting into, okay, who's getting paid out what and when? All right, so we want to make sure that we're looking at that, double checking those numbers, making sure that's all aligned with what you've seen in the offering memorandum, right? You want to make sure that you review the fees, okay, that there's no surprise fees. One thing that I regularly find in PPMs is that the deal has zero construction to it. And guess what? The operator has the ability to take a construction management fee. Now, is that an oversight of the PPM, the legal person setting up the PPM? Maybe, maybe not. Okay, but this is a great, you know, you want to make sure you go here and that you're looking at this information and going, huh, why are they taking that fee? Or if that's not in the business plan, make sure that maybe they've recycled a PPM and make sure that that gets eliminated. Right. So then we've got membership requirements. So method is subscription. Okay, but this is also going to tell you what is required of you in order to get in the deal. Right. So you got to review the investor questionnaire, sign the company agreement, wire in funds, wire instructions are up at the top. All right. Then we're going to skip down to, in this particular PPM, page 64. So remember when I said when you want to make sure there's a business plan in the PPM, a lot of times what a savvy operator is going to do is that's why they spend all this time on the offering memorandum, is to fully delineate the business plan for the investor. And they're just going to insert this in to the PPM. Now, what you want to make sure is that this is the same offering memorandum you've been reviewing and that it's not a different version. Okay, you want to make sure it's the same one in the business plan. Okay. All right. Okay, now we're getting down to, so before we're looking at the PPM, now we're getting into the section with the subscription agreement, right? So our section 2 of our PPM, we're going to scroll past our business plan. We're going to get down here to our subscription agreement. So all this legalese above is essentially, who is the subscriber, what are they investing, what class shares they're going into, okay, that they've read and understood everything in the PPM, and they're going to sign this either as an individual, okay, or as an entity, okay. So I think the number one mistake that I see investors make, or a top mistake, is that they maybe invest through an IRA account, but they fill out the document as an individual, or right. And so that's not right. Okay, titling is not right, funding is not right, money is not going to probably to the right place. Okay, that's in violation of your custodian agreement with your IRA provider. It could blow apart your IRA even if it was if somebody else discovered it and not you, and then went back and fixed everything. So this is where it's just really key to make sure that you're filling everything out correctly in the very beginning. All right. So also part of the subscription agreement, you're going to put in your bank account information. All right. That way we know where to send the distributions to. Make sure that this account information is the same, titled the same as how you titled the asset. All right. Now we also have part of this, the subscription agreement is who is the underlying, who's the investor. Okay. So it's called confidential investor questionnaire. Essentially, we're getting at investor suitability. So you can fill this out as an entity or as an individual. Oftentimes when people are filling this out as an entity, they don't have, their LLC doesn't have $5 million in assets. Their IRA account doesn't have $5 million in assets. So they're going to check this box. For us on this questionnaire is 9. But what does 9 say? It says that is an entity in which all of the equity owners are accredited investors. Okay. And all the owners can check the above boxes. Okay. So anyway, or sorry, that they meet one of the requirements below as an accredited investor. Okay, so that's what mostly people are doing. Okay, if you're investing through an entity. All right. Now, here's the LLC tax form. So remember, we need to know if you're investing as an entity, who is the underlying person, okay, that is a member of that LLC. So we need to have visibility there. All right, so you'll need to fill something like that out. That's pretty standard. And again, you can also fill out this investor questionnaire as an individual, okay, and hit one of those 4 or 5 ways in order to qualify as an accredited investor. Okay, then the last part we're getting down to is, again, remember what we just finished up with the subscription agreement section. We went over the private placement section before. Now we're getting down to our company agreement. And so again, you want to make sure that there is an actual LLC being set up that you are investing into that holds the asset. Okay, so you want to make sure that there are articles of organization and membership interests outlined. All of these things are included in the company agreement. Okay, so review your company agreement. Okay, making sure that it is what you expect it to be. Now, everything above here is pretty standard boilerplate. Where things get, except for the waterfall, right? That can change. All right. Now, a lot of these things are boilerplate. Now, this is where the rubber meets the road. So making sure, I would have your lawyer put eyes on everything. I cannot advise you to only point them to one section. And the company agreement is where you're going to see a lot of the deviation on how the company is organized. Okay, this is what changes probably the most deal to deal to deal. Okay, but again, I can't advise you. You need to make sure that your lawyer is got eyes on everything if you're going to have your lawyer review it. And once you review the company agreement, you're going to come down here and you're going to to the member signature page. You're going to sign it. And then lastly, to wrap up, you're going to provide your accredited investor letter. Okay, you can either get a sign from a lawyer or a CPA. For us, we provide everybody that's doing that through a professional, a template. Okay, so nothing gets missed. You can use a third-party service like Parallel Markets. Maybe your operator uses Verify Investor, but if you already have a letter through Parallel Markets and vice versa, ask if you can provide that letter. As long as it's dated within 90 days, it should be, you can file it once with the operator and it should be good for about 5 years. All right, guys, that was a lot to go through. Thanks for hanging with me there. This is like dry stuff, but it is necessary for you to know as a passive investor. One, so you can go into the deal fully knowledgeable about what's happening. You now know what are all the different parts of the PPM that you need to make sure that align, that are present. If any of those things are not present, ask questions. Okay, trust but verify. Right, that's what I come from the previously from tech world before this, and then the healthcare world before that. Trust but verify. All right, guys, I'm going to open up the floor to questions. You guys jump on over to your Q&A box. We had another question regarding GP and co-GP. We've got, so general partners, right? We've got the slices of the pie, right? You're going to have your main operator, like all of them might be co-GPs. So I think you guys don't confuse yourself. It's just that you want to understand who's actually operating the deal and who's just bringing capital and maybe doing some asset management. What is their role? So the main question is, what is that person's role in the deal? Okay. And are you comfortable with their role in the deal? Okay. For me, I like investing with direct operators, but every once in a while with a co-GP, somebody who's taken more of a minority role in a deal, they may be able to give me better terms or maybe not even better terms. Probably I should say access to a deal that I otherwise would not get access to, right? So some deals require $1 million investment. Well, those co-GPs can negotiate, hey, if I bring all my investors in, can we get, can they get access to the deal for $100,000 check, not $1 million check, right? So there's no really right or wrong way to do this. You just need to understand, is that person the day-to-day boots on the ground operator for the deal, or do they have some other more minor role in the deal? And are you, as the investor, okay with that? Right? Can LPs in the deal get documents with different terms and conditions? No, they should not. Limited partners should all get one set of, everybody should have the same PPM. Okay, there might be different classes that you go into that get different terms. So maybe there's a class A that's only cash flow, no equity. Maybe there's, in the same deal, there's a class B that has a balance of preferred return cash flow with an equity bump on the back end, right? Maybe you can choose to mix between the two asset classes, but there should just be one PPM. Okay, big breath there. Okay, I think this brings up a good point because some operators allow what we call sidecar agreements, side letters. And typically no operator writes these. I haven't really seen, let's put it this way. You can look at the PPM. The PPM will say whether they're allowed to do side letter agreements. Typically a side letter agreement, I would say most of the operators that I have seen or worked with, if they do a side letter agreement, it's because an investor is bringing like $3, $4, $5 million or more to a deal. So if you're a regular retail investor, investing $1 million or under, that's probably not, you can always ask, but it's probably not worth anybody's time. But say you're coming in with like a 1031 exchange, that's a whole different set. You're going to get, that's a tenant in common relationship. That's a whole other set of paperwork that we're not covering here. How close to the PPM execution should the accredited investor letter need to be dated? Does it within 90 days? So that's the rule. Securities and Exchange Commission says that the operator, remember, this is not the operator's requirement. The operator has chosen to organize the deal and utilize one of the Regulation D exemptions, either a 506A, B, C, or D. Okay. If it's we generally operate in the 506C exemption, meaning we can talk about any deal from the stage on a webinar, we can advertise it, but that does require we verify all of our investors as being accredited, okay? Meaning they meet one of those 4 or 5 definitions of being accredited according to the Securities and Exchange Commission. Okay, so again, this is not our requirement, but the Securities and Exchange Commission requirement. So that letter needs to be dated within 90 days. You can always go get a new letter, right? Get it updated, but it might come at a cost, either a monetary cost or a time cost. So I generally, maybe say to limited partner investors, if you don't see yourself investing in a deal for like a few weeks or a couple months, hold off and get your letter at that point in time. If you're actively looking to invest and you know you're going to be invested in a deal in the next 30 days, next 30, 60 days, yeah, go ahead and you can go ahead and take that stress off of you and get your letter. Honestly, you can get your letter in a couple of hours. So it's not a huge heavy lift. I'm going to give you a little tip and trick, right? That's what these boot camps are for. If you are using, or actually for any letter, right? Make sure you create a file system for yourself. That way, if say like you invest in a deal today and then another one 6 months from now, remember with another operator, that operator is going to need a new letter. They can't use the one from today 6 months from now. Create a file system for yourself so it's super fast for you to like shoot those files to your lawyer or your accountant or upload them to parallel markets. Okay, you can actually get that done really fast. Okay, it's really good to be organized and create a system for yourself. Can you go over the must-haves of a PPM? The PPM requires there's 3 sections of the PPM that have to be there. That has to be the private placement memorandum. Okay, that's actually a section there. The subscription agreement and the company agreement. If those 3 major areas are not there, ask. Okay, and if they're not being provided, run. And then we got into what it is you want to make sure that you double confirm between what you saw. Hold on here. You want to make sure to double confirm between what the information in the offering memorandum and what you've heard on investor webinars and what's in the deal. Here's kind of like a short list. It's not exhaustive, but a short list. And then, as always, new operator, new deal, new asset structure, deal structure with the same operator, is money well spent to have a lawyer take a quick peek at it. Okay. It's part of your due diligence. I know people don't like spending $300 or $400 on a deal, but if you're like 99% of the way there, just consider it part of your due diligence fee, right? Okay. You would spend money if you were buying your own piece of real estate, doing appraisals and inspections and stuff like that, your due diligence there. Consider this, if you're putting down $100,000 investment, $300 to protect that investment is, probably money well spent. Does the GP need to disclose sidecar agreements at all to investors? Depends what's in the PPM, right? Most operators, I shouldn't say most operators. I know we don't generally do sidecar letter agreements. We don't like doing that because it's not transparent to the investor. We will take 1031 exchange money, and that's but that goes into the general partnership structure because it's the tenant in common. Guys, opening up a whole other can of worms. We've got a webinar on that. Anybody that goes into tenant in common, structure with us on the general partnership side, because the 1031 exchange money is being underwritten by the lender prior to close. So there are our eyes on those type of investors. But that is a great question to ask for your operator, because yeah, it's generally something that you don't want to, you want to be as transparent as you can with your investor, I would think. But it all depends on what the PPM says is allowed, the operator is allowed to do. Great questions, guys. What other questions do you guys have? We've got just a few more minutes here. As you're thinking of your questions, for those of you who are still here, I would love it if you went over to the Q&A box and let me know if this is useful or not. How could it be improved? What else would you like to see? If you're, also if there's another topic that you would like to dive into, let me know that too. Again, I craft these sessions based on your comments, your feedbacks, in order to provide the best service that I can for you. Oh, awesome. Thank you so much. Got it. Somebody that really enjoys it. You're very welcome. Thank you. All right, guys, I'll hang out here for a couple more minutes, but for those of you who hung with me to the bitter end, thank you so much for spending time, not only with me here today, but investing in yourself, your knowledge, your expertise, so you can go into your next deal with confidence. So as always, I would love to get your feedback. More importantly, what do you want to hear about? Again, so I can be of service to you. But anyways, we will see you next week for our masterclass and next month for our boot camp.